Welcome back to my channel, fellow investors. In this video, I'm going to cover a small ocean logistics company by the name of Pangaea. You probably have never heard of this company. They're tiny, small cap, under $1 billion in value, but they've had a really nice return in the last 5 years. I'll show that later. I've been a long-term shareholder of Pangaea, and I wanted to update my analysis since the company announced their earnings today. Pangaea, they specialize in shipping particular types of aggregates, loose materials like cements, sand, gravel. They also do things like grains, beans, and ship them from one continent to another. They also specialize in the northern route above North America. In certain parts of the year, the ice breaks up, or they're able to break through the ice and cut the shipping route considerably between Europe and China, which becomes much more affordable for companies to take that route versus having to go down to the Panama Canal, which costs money, or even go down further around the tip of South America, which would really be a long voyage. The company announced their earnings today. So with their new financials, I'm able to update my analysis and value the company. I'm a current stockholder. I've been a stockholder for some time, and I'll need to decide whether I'm going to hold my shares, sell my shares, or buy more shares. And it'll be based on the valuation as well as how the company is doing. Let me tell you more about the company. Let me go over the fundamentals of Pangaea. Their market cap is small. $382 million is their market cap, and it should be down because, again, after their earnings, the stock went down quite a bit. We'll see where it opens tomorrow, where it trades. The company has a forward PE of just 7.5, very low PE company. Historically, they pay a really nice dividend. Right now, it's at 4.8%, and historically, they paid up to 8%, 10% dividend, while their stock has been appreciating. If you look at the 5-year chart, especially from 2020 up until now, it's really gone up. It's gone up 143% over the last 5 years. And more recently, if you look at the last 5 months, it's up 55%. So it's been a really nice stock to hold. Overall, it's only covered by one more analyst, and he has a hold rating. This is a tiny company, so I don't expect many analysts to cover it. And there's been really good investors that buy these small companies, hold them for a long time where there's really good value. And I think I may have found a company. It certainly paid me back. I probably have already sold enough shares to recover my full investment in Pangaea since I started buying in the year 2020. I'm going to value the company by first discounting the cash flows that I expect the company is going to produce in the future and getting a current value of those cash flows, and then value it a different way, which is looking at the earnings per share and trying to get to a stock price based on earnings per share. Let me start with free cash flows. So they had positive free cash flows in the full year 2023 that just closed. I'm going to have that as my starting point of $27 million. I'm going to grow those cash flows by 4%, which is very reasonable since the economy should be picking up soon. And this company tends to really get more premium shipping rates and do better than most other shipping companies. In terminal value, I'm going to grow those cash flows by 4% as well. And that should give me a nice conservative forecast of the free cash flows I expect from the company. Keep in mind, over the last 5 years, they've grown free cash much faster than that, but I want to be conservative. I'm also going to be conservative with my discount rate at 11%. And I'm going to use that to discount all those free cash flows to get to a current value of $350 million. The company has $87 million of cash, $121 million of debt. So the equity value of the company is $316 million, but their market cap is $383 million, which means the company is trading at a 12% premium. And in my book, that's pretty close to fair value. If I really like the company, I'd be willing to hold and maybe even buy shares on dips, because if I really like a company, I just think they're going to continue to grow their earnings per share and grow their free cash flows. So that's within reason of a valuation. Earnings per share value, I'm going to take their expected earnings per share for 2024, which is $1.10 per share, go times a 12 PE. It's expected the company is going to start growing now. They command a good shipping rates, and they should grow in 2024. I'm going to grow their earnings per share by 4%. And I'm going to use this formula here to determine the value based on earnings per share. And the value based on earnings per share is $11.27. Current stock price is $7.74. So you have a discount of 46%. I combined the two, and it has about a 7% discount on Pangaea, which I think is more fairly priced versus any big discount offered. So should I buy more shares, hold my shares, or sell my shares in this company? Well, let's take a look. Let's start with the company. Do I want to be a part owner in the business? Yes. I think it's a really well run company. I like their specialization. They differentiate in the market. And it's an industry that has really high highs and really low lows. We're getting through one of the lows, and I think the best is yet to come for this industry. The balance sheet is in good shape. Debt is less than 3 times EBITDA. So the balance sheet's in good shape for this company. And they don't offer a discount. I think it's fairly priced. So I'm going to hold my shares of Pangaea, see the company operate for a quarter or two. And if the valuation changes, then I can decide whether I want to buy more or sell my shares. I hope you found my video on this really small company interesting. I really appreciate you watching. Good luck investing in 2024.